What's going on, everybody? It's your boy C-Zar, and we are talking about Bitcoin today. It is the 21st day of August. Here we are at about $77.3 thousand with roughly 9 hours and 11 minutes left in the day, seeing some absolutely explosive price action. No pun intended. And here we are. Here we are moving up. Today's a big day for a couple of reasons, okay? I've had my doubts, and I'm sure a lot of people have had their doubts from the beginning of this rally that we've seen over the past 5 days unfurl. There's a couple of things that I want to say here that might sound contradictory, but as we go over the analysis, it'll make more sense, okay? First and foremost, I think yesterday was pretty damn close to doing it for me, but today was the nail in the coffin. Today, we officially say the bear market is over. The low is in, okay? The low is in. On this day, I was thinking 20% chance that we go that the low is in, 80% chance that we go lower. On this day, I was saying, okay, maybe it's like a 20-30% chance that the low is in, the rest that we go lower. Yesterday, I was saying, okay, it's 50-50 that the bear market might be over, and we were leaning a little bit more bullish. Today, there's no doubt in my, or there's very, very little doubt, I should say, in my mind that we go lower than this low. I'm officially on board with saying that the bear market is over. I was very close to saying it yesterday too, if you watched the video. We just, again, whenever you move up in a short amount of time like this, you got to be careful that it's not a fake out or anything like that. We do have decent volume, but it's not incredible volume. Typically, whenever we end the bear markets in the past, we do see this incredible volume come in as we're pumping. We don't really have it here, but it's still an incredible move. There's decent volume, above average volume happening, and we did move down pretty fast. It's almost like a giant BART pattern, right? Like this is like the largest BART pattern that I've ever seen Bitcoin perform, but it's a bullish BART nonetheless. And again, I said it'd be contradictory what I'm saying here because do not get confused with end of bear run with beginning of the bull run, because that's not necessarily the same thing. It can be. There's times where it has been, but it's not necessarily the same thing. We think end of bear run meaning beginning of bull run. That's just wrong. Okay, it can mean that. Typically, it doesn't. Let's just go over Bitcoin's history. Okay, we're in the monthly time frame here, right? End of the bear run here. Did the bull run start there? No, you moved sideways for about a year, and then the bull run started. End of bear run here. Did the bull run start there? No, you moved sideways for about a quarter of a year or more, and then the bull run started, and then you moved sideways for about 18 months, and then the bull run really kicked off. Okay? End of the bull run or bear run here, yes, but not the beginning of the bull run. You started the bull run 2 months later, okay? So the end of the bull run or bear run was in June, right? Was it July? Was July the low? That doesn't sound right. Was it July? July was the low. Oh, okay. Okay, July was the low, technically July 1st. Okay, so July, here we are, almost 2 months later. Is this the beginning of the bull run? It's possible. It's possible. Typically, you find the low and then you consolidate for multiple months and then you move up. Here, we had the low last month on the first day, so it's not really like we've consolidated here for a long time. However, throughout this range, we have been consolidating now for, including this month, about 7 months. We've been in this range for about 7 months, and that does suffice, in my opinion, for a consolidation phase before kicking off the bull run. Last cycle, we only consolidated for 1 month after the low because, again, in this whole range, we actually did consolidate for quite some time. Now, even with that, even with this ignition to the bull run starting right there, in comparison to what we're doing here potentially, we still moved sideways there for 1, 2, 3, 4, 5, 6, 7 months. And on the 8th month, then we moved up on the 8th month. So, bull run, not a bull run, I don't know so much about that, but I'm very convinced at this point that the bear market is over, which is incredible. It's crazy. It's awesome that we're here, guys. Now, I do think that this little run here is going to stop. We have moved up a lot in a short amount of time, and again, the volume's decent, but it's not like tremendous. It makes me think that we're probably going to see a little bit of a pullback. Okay, a little bit of a pullback. We could go, we could go all the way back down to where this thing started. Even if we went back down to like 64, 63K, even if we had a lower low than this, I would still think that the low is in. I still think that we're in at the end of the bear run. It would be really odd. It would be very, very odd if we saw a lower low from here. It is possible. It can happen. We have to be vigilant and be, cautious. But at this point in time, this is not bear market behavior. You don't see movements like this in a bear market. We never have for Bitcoin. Whenever you're starting to get above prior resistance points in a bear market, that has always marked the beginnings of a bull run. So there are signs that we are starting the bull run right now. There are signs that this could be the beginning, but is it the beginning of the bull run? What if we stay here for another few months? What if we're consolidating like this, right? We do something like that, and then in time, boom, it's December, and then we're breaking out and rallying. Was this all just one giant crab phase, and then the bull run started there? That might, from a technical perspective, make more sense. Tomato, potato, whatever you want to call it, doesn't matter. But yeah, I do think that the bear run is done. It'd be really wild. It would be really wild to see lower lows at this point. Anybody who's bearish, who thinks that we're going to see lower lows, yesterday was the day where things should have started to shift. If things haven't shifted by today, if this wasn't enough, I don't know what it's going to take, man. Maybe some time. We look at this here on the daily time frame from the relative high in May to the relative low that we had in July. We actually tipped the 886 perfectly. I want you to understand how rare of a move this is. Okay, 382, 236, normal stuff. You typically work your way up to the golden ratio. I thought we'd find resistance here, pull back to this zone, and then continue to rally. That's common behavior. You stair step through these fibs like that. We didn't step at all. We just launched right through. It's incredibly rare to push through your golden ratio on the first attempt, which you did, and then also hit the 886 on your first attempt, which you did. We can go higher. We could see the price go higher, but again, it's incredibly rare to be in this situation, let alone pushing higher than the 886. The volume we have, it's less significant than the volume we had that brought us down here. We are finding points of resistance beyond just this 886. To me, statistically speaking, it makes the most sense that we have found a relative high. 79K, 79.5K is the high, and likely from here what you'll see is a recovery down to the golden ratio, 72.1K at a minimum. There's some rules here. Okay, I've been doing fibs, I've been doing technical analysis for 11 years now. There's some rules that go along with this, okay? If we saw the golden ratio providing resistance the first time, we came down here and found support, being up in this area and finding resistance would make the golden ratio statistically a more likely zone to find support. If you saw this type of maneuvering, it makes it more likely that you find support here. Why? Because it's the golden ratio. Why? Because prior resistance and prior support, or prior resistance becomes current support. You have more structure, okay? We didn't do that though. So statistically speaking, this model makes the golden ratio more likely to hold support, which then ipso facto means that this is less likely to hold support because we just pushed through the golden ratio. So what I'm getting at is 72.1K could hold. The likelihood that it does hold as support is less likely than if we showed more structure. There is a chance, there's a likelihood, a statistical probability that the golden ratio doesn't hold and that we go instead to the 0.5382 after all. It's common, very common, when pushing through the golden ratio and finding resistance at the 786 to go back to the 236. It's very common when you go to the 886 you push through on the first attempt to go back to the 382 or the 0.5, somewhere in this area. So that's what we're running with. That's the playbook. I don't know if you'll find that anywhere online. This is just observations that I've made over the last 11 years of my analysis, and this is just statistically what's likely to happen. Doesn't mean it has to happen. Sometimes you just push all the way through and you defy statistics and gravity. But I don't think that's going to happen here. Again, we're not seeing gravity defying volume, but I don't know. Things are getting crazy, guys. What are we doing here as far as fear and greed goes? We're at 63. We're in greed. We were in fear 5 days ago. Less than a week, man. I mean, it's significant movement. It's significant movement. We haven't seen movement like this in years. In years, like since 2024. We haven't seen movement like this. This might be the biggest. I want to see the weekly candle here. 72. Greed, baby. Right up there. Yeah. What was I going to go over next? Okay, so the 886 is providing resistance. We can put a line right there. And let's just see if there's anything else that's providing resistance, right? Prior support. Prior support here, prior support there. We kind of are in this resistance zone there. It makes sense. And you know what else I want to do? I want to put at the 0.5, the 382, and we can throw the golden ratio on there too. Sure, let's put the golden ratio on there. We'll make that line golden. Golden, kind of yellow. I don't know, whatever. I don't know if that's gold. It's kind of orangish, but whatever. I didn't want it to be yellow. It's kind of gold. It's kind of like yellow snow actually. But anyways, resistance here. We'll make that one red for resistance. White zone for loading and unloading, probably loading in this case, and the yellow zone for the golden zone there. Look at this on the weekly time frame. We're finding resistance at prior zones of support here, prior zones of resistance and support here. And if we were to find support back here, this would be at prior points of resistance, prior points of support, prior points of resistance as well, going back in time, prior points of resistance. Very significant level, this 69 to 66K level for support. I'm going to delete the red line now. I'm going to delete the golden line now because I don't think that those are going to be helpful in this next part. We measured from a high to a low here to find resistance at the 886. Now we're measuring from the high, the all-time high, to the bear cycle low, which I'm pretty confident that was, and we actually went right up to the 382. Not financial advice, not a financial advisor, but the rules of the 382. And yes, you can have multiple fibs and you can respect both fibs at the same time. Absolutely you can. Yes, you can. The 236, by the way, is all the way down here, right at one of these other lines that it would make sense to pull back to, just so you know. And we can wick below there. We could find support here. You know, there's all types of possibilities here, guys. It's very common to wick above the 382 and then close below it, which looks like that's what we're doing here. If we do this, and, you know, by the end of this week, we close there just below the 382, if on a daily basis we don't close 2 days in a row above the 382, the statistical probability of returning at least to 68,000, 69,000 of returning to that area, it goes up dramatically. I mean, that's a very high probable outcome. From the current price for Bitcoin, that's about a 10% drop. If Bitcoin drops 10%, you guys, and it could be a day, it could probably be multiple days, maybe even multiple weeks that it takes to drop there. The rest of the market's probably not going to have such a good time. There's going to be coins that pump because the bear market's over, so there are going to be coins that pump, altcoins that are pumping, that are making their moves, that are hot commodities that people are buying up. But for Bitcoin moving down like this, moving down 10%, most coins probably take a bit of a break as well. Okay. And I think that's what we're going to see from here, a 10% move or more, 10% or more. Yeah, that's probably what's going to happen. To the downside. 10%, what's that at the most? 14%, yeah, something like that. 382 resistance, 236 support, 886 resistance, 382.5 area for support, whatever the case may be. Let's go back and just see here last cycle what we did from a high, all-time high to the bear market low. You did technically, actually, stop right above the 382. You did move up a little bit more. You held support. You didn't go all the way to the 236, but this is different, right? Again, this, you have some structure. You have a little bit of structure there. Whereas here, there is no structure. We just moved up. We just moved straight up. There's no structure at all. We just moved straight through the roof there. The cycle before, from a high to a low, we found resistance just above the 236, found support on it right there, and then moved up. Again, just kind of a straight move up. Oops. And look at what that did for you, right? Look at what that did for you. That brought you all the way back down, right? When you move up in a very quick fashion, look at this. I'm not making this up, man. 786, you didn't stop at the golden ratio on your first attempt. 786, you went all the way back to the 236. You actually went below because of the COVID crash. At least to the 382. If you think this is a black swan event because of the COVID crash, that's fine. Well, this was before COVID really hit like international levels. It was just in Wuhan at this time in December. I remember hearing about it like the first week that it was going on, that there was an outbreak in Wuhan. Because I follow, is it Box Mining or is it who is it? They lived in that area. I don't know if they still live there, but they lived in that area, and so they were very aware. And that's the benefit of crypto, man. It's worldwide. You can be aware of things, world events, not beyond just finance. Anyways, still down to the 382, even without the black swan event, right? So again, it's not good to just move up through the golden ratio like that. You typically do pull back. The faster you move up, the more volatile you'll be on the way down as well. And then let's just see here. What did we do? All-time high, bear market low, 236, a little bit of structure. You went up to the 0.5, came back down. This is better stuff, right? But volatility nonetheless. Each one of these times after you had a little move up, after you saw the ending of the bear market official, you saw the bull market beginning, right? High to low, you dropped 40% there. I don't know. Would we measure, would this be appropriate high to low here to measure 34% drop? Would it be a 52% drop? Should we just measure this initial little pivot here from a high to a low and call it 14%? I don't know. But still something greater than 10%. Remember, 10% takes us back down to 69K. And then here from a high to a low, 22%. On all of these initial pumps, we saw, can we agree that we at least saw more than 20% off of these initial pumps? Maybe here at least 14%, whatever you want to call it. We're up 23% this week, which is phenomenal. From a high to a low, to pull back 14% or more would take us back below 69K. So just understand, at all these beginnings of the bull market, we do see volatility. It does happen. And then on top of that volatility, you have time, okay? You add time to that. You, after moving down here, you were range bound, really, for almost like 2/3 of a year. Here, we were range bound. I mean, at least here you were range bound for about a month, but really you were range bound here for a year and a half, right? And then here, after that initial surge, you were range bound for about 2/3 of a year again. So it's not likely right now that we're going to cross above 100K by the end of this year. Okay, we're probably not going to be above 100K by the end of this year. It's possible that we do move higher, but I'm thinking, again, for all the reasons we've already talked about, that the high is in, that we have a relative high. We look at the short-term stuff. We go into our indicators. There's no real implication that we're ready to chill here. I mean, we look really bullish. Things look good. Volume's not really dying off. It's not that impressive a volume, but it's good enough. Stochastics don't look bearish. The MACD does not look bearish. There's nothing bearish on the 1 hour. There's nothing bearish on the 4 hour. There's nothing bearish on the daily. It's just such an explosive move. There's no signs of readiness to come down. So all we have to rely on are prior areas of resistance, prior areas of support, and prior or current Fibonacci retrace levels. We can also look at our liquidation levels here. This is still loading from yesterday. That's hilarious. Let's just refresh it. Little heat map. Past 24 hours. We need something that's more like, we could get at least the past week. Let's do that. I don't know why the heat map takes so long. Maybe I'll just close this tab down and we'll open up a new tab. How about that? How about that? KTA making a bit of a comeback. That's nice. We were calling for that one when it was below 7 cents. It's definitely gonna, I think, do great things. If anybody's looking for a DeFi project, KTA is a good one to invest in. Not financial advice, not a financial advisor. Over the past day, even with this move up, you guys, you see, if you're shorting all the way up, you're gonna keep moving up. And I'm almost inclined, because there's over $1 billion in shorts still in the past 24 hours, almost inclined to say that we're going to go back up to like 79K, and maybe we do. Maybe we get some double top before we move down. But there are a lot of longs on the table right now. In the past 24 hours, almost $4 billion in longs. Over the past week, about $5 billion. Over the past 30 days, nearly $20 billion in longs. And we zoom out 90 days, last 3 months, I mean, even more. There's like $27 billion in longs. A lot of these islands, these recent islands, they get cleared out at 70K. That's $7 billion that gets cleared out at 70K. 66K clears out $13 billion. Nearly half of all these longs gets cleared out at 66K, which, again, 66K is the lower end of this range, the 382, 66K. Prior resistance, we could move all the way back down there. That's about a 14% drop from here, right? And out of all the initial pumps from any bear market bottom we've seen, at a minimum, we saw a 14% drop. And typically, you saw more than that, right? We do have a weak bear market. We did have a weak bull market as well. Maybe this drop won't be that significant. It'll be on the lower end of significant, but still, there's a lot of paper to move through to the downside, less so to the upside right now. Still enough where we could again make another attempt up to the 79K area, but I'm skeptical. At this point, we're running on fumes. I mean, if we just keep moving up, guys, again, that can have serious repercussions. That can have serious. The last time that we saw a move that kicked off a bull run like this, and it was just non-stop, and it just kept moving up. That was all the way over here, and that had serious repercussions. Now, mine is COVID. Imagine this was the low in itself. That's still like over a 50% drop. It still wipes out months worth of price action. And then imagine COVID didn't hit. You probably would have had months still of recuperation before breaking out. So it's fun. It's exciting. It's just not healthy. It won't build. It'll set us up more for a longer, prolonged consolidation phase rather than a prolonged cycle. But we've got a lot of time, guys. We're starting off this cycle far earlier than we've ever, or I should say we're ending the bear cycle far earlier than we ever have. And that can really set us up for a very long bull market as well. I'm wondering, man. I mean, this is definitely a bear market. It's just such a short bear market. I'm wondering if we're going to look back at this like it wasn't a bear market and really this is all like one big cycle. That would be wild. That'd be really wild. Because in my own analysis, I don't accept this as a bear market here. How many months was that? Like in my own analysis, I think that this whole thing was one bull market, 5 months. Yeah, we definitely had more than a 5-month bear market, right? But did we? Did we though? Because if we're saying that this is the end of the bear market, there's an argument to be made. 8 months. There's an argument to be made that the bear market ended here, and we've just been in a crab market since 4 months down. I mean, I don't know. We might look back at this a year or two from now as just one big super cycle. CZ was right the whole time, guys. I don't know. We'll see. We'll see. I'm sure that'll be debatable as the years develop. Very bullish. Very, very bullish month of August here. Not what I was expecting at all. The MACD, the stochastics, the RSI, all showing end of cycle behavior, all showing signs of readiness to move up. And this is the monthly time frame, so that can take months to develop and come alive. We do have hidden bearish divergence on the weekly RSI, higher highs in the RSI, lower highs in the price. That is a little bit bearish. The stochastics are separated. They've diverged from each other. That is a little bit bearish too. Whenever you get that separation, typically you are at a high point or a low point. The MACD, it's bearish overall, but it looks good right now. I mean, it's not bad. That's for damn sure. There's not really much else to talk about. I hope you guys got something out of this. I hope you enjoyed the video, and if you did, hit the like button, subscribe. Thank you all. My expectation, again, is that we move back down to this 69 to 66K area, somewhere down here. And as far as how is it going to happen, I don't think that it's going to happen next week. I don't think it's going to be fast. I'm thinking it could take until October. It could take until the end of September. It could take longer than that. It could. But midterms, do remember, midterms are coming up in November. Right? November, is it November 5th? I don't know. November whatever. Somewhere around there. So we probably do see some excitement going into midterms. I wouldn't be surprised if we did see higher prices by some point in October. I wouldn't be surprised. But time will tell. Anyways, I've got nothing else for you. Hit that like button, subscribe. Thank you all for being here. I'll see you on the next one. Take care. Bye-bye.